Yes, as you said, we left the growth forecast for oil demand for the year largely unchanged, but the near-term outlook we're less optimistic. The new variants of COVID cases, renewed lockdowns in Europe is really weighing on mobility, which means that the growth will be slower than we had first anticipated at the start of the year. On the other hand, we're seeing a more optimistic outlook for the economy and for oil demand recovery during the second half of the year. Vaccination campaigns are picking up, although we got off to a slow start in Europe and other places. We are expecting a very strong rebound in demand in the second half of the year. So as we start in the 2021, mobility is very restricted in Europe, in the US, travel, international air travel, travel bans remain in place. So the oil demand is expected to fall year on year in the first quarter compared to a very weak first quarter of 2020. And we're seeing demand declining from overly depressed levels at the end of the year. But as I said, if vaccinations efforts gets underway, the economic recovery should speed up, and so should oil demand. So we're expecting stronger growth in the second half of the year.
I want to turn to the supply outlook. It appears as though there's still quite a substantial global inventory overhang. How long do you think that is going to persist for? And at what point in 2021 should we start seeing those inventory numbers come down?
Yes, we're already seeing an acceleration in the drawdown of the inventories that started in the third quarter of last year. Fourth quarter, we think that global inventories declined by more than 2 million barrels a day. 2 million barrels a day, and we're seeing continued stock draws into the first few months of 2021. So what we're seeing is that our balances suggest that demand is still running ahead of supply. Very strict compliance to the OPEC cuts and the additional supply reduction promised by Saudi Arabia for February and March should accelerate the stock draws in the coming months. So, but we think, excluding the inventories that are built up in strategic storage and in China, we think that it will be during the second half of the year, mid-year, second half of the year, where we get back to the 5-year average or normal levels. If the OPEC Plus cuts stay in place through the year, we risk having much stronger stock draws in the second half of the year. That paves the way for OPEC Plus to start easing the cuts that they have in place at the moment.